we talk about my interest rate? Interest rates are rising, and as a buyer and a seller, you should know what that means for you and what your options are. Hi, thank you so much for stopping by my channel. My name's Cosetti and I'm a top producing real estate agent here in Napa Valley in Solano County. If you're looking to buy, sell, or invest, my real estate team and I would love the opportunity to chat with you and earn your business. As always, my contact information will be posted right here and directly below this video. So let's talk about rates. How are rates determined? Rates are determined by the secondary market for mortgages and the volatility in the market. Factors that affect your individual rate is 1, the amount of the loan, 2, loan to value ratio, how much you're putting down versus the value of the home, 3, your credit score, 4, your lock period, 5, the property type, primary versus income versus second home, 6, your loan program, conventional versus government backed such as FHA or VA, 7, a purchase versus a refi versus a cash out refi, 8, fixed versus adjustable. Don't let an adjustable rate fool you. Make sure that you're not getting a really good interest rate up front and that you're going to get hit with a higher interest rate later on. 9, your amortization schedule. The amortization schedule is a record of your loan payments that shows the principal amounts and the interest included in each payment. The schedule shows all payments until the end of the loan term. Each payment should be the same per period. However, you'll pay more interest in the beginning and more the principal at the end. So basically, the banks are going to get their money up front. You can always help yourself out by making an extra payment a year because that money will go to the principal of your loan. So making an extra mortgage payment each year could reduce the term of your loan significantly. The most budget-friendly way to do this is to pay 1/12 extra each month. So for example, by paying $3,250 each month on a $3,000 mortgage payment, you'll have paid the equivalent of an extra payment by the end of the year. What doesn't affect your interest rate? Your gender, if you're married, your age, your demographic status, and not even your income. Now, points or buy down. I'm going to try and explain this in the simplest way possible. So let's say right now we're at about 5.25%, give or take. When you do a buy down, you have the ability to pay the interest up front. This works best if you're asking for a seller credit, which is something that's going to be more and more common as we go into a buyer's market. Also, this is a great tactic for sellers to make their property more attractive to a buyer as the market shifts. So let's say on a $1 million house, your upfront cost is $21,000, give or take, to buy down the loan. This has the potential to bring you down from a 5.25% to a 3.25% for your first year, 4.25% for your second year, and then your third year, you'll be back to 5.25% where you would have been originally. Now, the benefit to this, which we have no crystal ball, but assuming rates fluctuate back down in the next 2 years, you can then refi and lock the available rate. You will have taken advantage of lower interest rates from the very beginning through the life of your loan. Now, going into paying points, let's say on a $600,000 loan, you have 5.125% interest rate, but you can pay 1 point, which would be $6,000, to buy down your rate to 4.85%. This will save you $75 a month on your monthly payment and take roughly 6.5 years to make your investment back, which is fine if rates keep going up. But let's say they go down in 2 years and then you go refi to lock in the lower rate, you're losing out on 4 years that you paid up front. So that being said, it's very important that you have an amazing local mortgage professional and real estate agent to talk you through all of these options and figure out what makes sense for you in your specific situation. As rates rise, lenders will typically come out with new programs that they didn't have access to before, so make sure to check on that too. Also, keep in mind, internet pricing engines are rarely accurate, and you have to take into account the company and the accountability of it. So please take the time to go talk to a local mortgage professional. They will save you a world of headache throughout the home buying process. Again, my name's Cosetti. If you have any questions, please feel free to give me a call. It was so nice to chat with you guys, and I can't wait to see you soon. Thanks so much.